Hey everybody, it's Tradius Trades back with another video. Today I'm going to do a deep dive into gold. I'm going to look at it using price action. I'm going to look at some other fundamental indicators, give you a general overview of what I see in gold. I always start on the monthly time frame. So monthly, we're in the midst of an upswing, which is pretty obvious. Every single method of trend measurement that I have on gold is bullish on the monthly. So what that means is, since the monthly is bullish, we're in a monthly upswing, momentum is to the upside. I am looking to take daily oversold longs if the daily chart is in alignment with the upward trend. So right now we still got a very clear, strong uptrend. So what basically this means is, when I'm looking at the daily chart, I'll get rid of everything except for what I use, which is the 18 MA. So we're in an uptrend because we've had two consecutive closes above the 18 period MA and then taken out the high of those two closes. So basically that tells me the trend is up. And then anytime we get oversold on the percent R, one of these periods, 4, 10, or 14, gets oversold, I want to put buy stops at the high of the day the market gets oversold, and then trail myself up below the lows of each day. It's what happened back here in early April. We're in a strong uptrend. We get oversold, buy stop at the high, stop below the low, and trailing out below the low of each day, which would have got trailed out right here. So that's basically what I'm looking to do on gold right now based on the monthly. So now I like to look at the weekly, because the weekly appears as if we're getting a bit of a momentum shift. So a couple things here. I've marked this out as a weekly sell. So if price trades down into there, most likely we're putting in a weekly short-term swing high. So these are the short-term swing points in the marketplace. You'll see that sometimes, though, those dips happen and it looks like we're putting in a swing high, but we still go up. That's why, until the daily flips bearish based on that 18 MA method, I'm still going to take longs on the daily until the daily goes bearish. So if we put in a weekly swing high here, momentum is shifting bearish on the weekly, I want the daily to confirm that before I'll consider taking shorts. So what would have to happen is, we have to have price trade down through the 18 MA. We need to have two full range bars trade below, and their highs would have to be below the 18 MA, and they could not be inside bars. And then I need to have a candle take out the lowest low of those 2 days, and that would confirm for me a bearish trend, and then I would be able to take shorts in alignment with the weekly trend, because the weekly momentum, because the daily would be in alignment with the weekly. So as of right now, I'm still leaning towards taking longs. I have a buy stop at the high here on the front month contract. I believe it's the August contract. So that's what I'm seeing here, just from a price action perspective. Take longs until it's evident that the trend has indeed shifted. Now, let's head over to some fundamental indicators. Interestingly, on gold, now the top pane here is the commitment of traders COT index. And what we see here is the commercials, the red line, are super bullish at the highs. This is a very abnormal thing for them to do. Usually they are hedging and getting short into a rally. They're selling into a rally. In this case, the commercials, which are central banks and hedge fund, or like banks, big banks basically around the world, buying this, and usually they're selling. So I've kind of ignored this market based on COT, just because the commercials are doing things that are different than I'm used to. And whenever something is confusing or doesn't make sense to you, just move on to a market that does make sense, because there's always something out there with a simple to understand setup based on how I analyze the markets. But what I see here, so that's odd, but let's take a look at a few other things. So we see here, sentiment is getting very frothy. So overly bullish sentiment in an uptrend isn't as good of a sell signal as if bearish sentiment in an uptrend. So I'll show you what I mean. We're in an uptrend. Let's take a look at when the sentiment got really bearish. We see right there, that was a beautiful buy point. So in an uptrend, these sell signals, or these advisor sentiment sell signals, are not as strong, because you're in an uptrend. Signals in alignment with the trend always work better. That's the whole premise of my price action strategy. Find out what the trend is and take signals in alignment with the trend. They'll work a lot better than counter trend signals. Then what else I notice on valuation is the treasury line here, the brown line. Gold is really overvalued relative to the price of treasuries, which is the main thing that I value gold against is treasuries, but also it's overvalued versus the US dollar. So we're overvalued. So we got two sell signals. Again, sell signals don't work as good in an uptrend. Since we're in an uptrend, look at the last time we got a buy signal. Great buy point. Look at this buy point. So still taking a look at that, we've got two bearish things going on here. Also, I'll take you over to the seasonal. This is using 10,000 weekly bars worth of data to come up with the true seasonal. We are in a bearish time of year for gold. Gold typically declines from now until basically July. What I notice is price is it's a bit stronger than the seasonal. So typically, gold is making a low right about now, but it's making a higher high. Or sorry, I should say it's usually making a lower high right now, and price is actually making a higher high. So price is bearishly or bullishly diverging from the seasonal. So that doesn't give me the greatest confidence that the seasonal will play out. I'd like to see it confirming or be weaker than the seasonal. But that's something to bear in mind. We do have a bearish seasonal right now. Those are the main things that I'm noticing on gold. So basically, gold, I'm bullish based on price action. Looks like we're due for a pullback just based on some of these fundamental indicators that I just showed you. One thing that would be very, very bullish is if we came up to here before trading down to this low. That would be Larry Williams' fake out buy pattern. So basically, what the thinking is this last week's bar looks like a reversal bar, and it might be a reversal bar. It might be the start of a reversal, but what the fake out buy is basically the failure of a bar to do what everybody thinks it's going to do. So if everybody thinks that it's going to sell off now and then it trades up to here, going to catch a lot of people off guard, and it's going to likely fuel a move to go much higher. So I'd be watching that level on gold. If it trades up to there, I think we're going to continue the ride up. And based on the current swing, if we do continue the move, it take us up to around 37.50. So that's what I'm looking to do. Buy stop at the high, and basically as this continues to if this continues to trade down, we're going to continue to get more oversold. And the thinking is oversold buy opportunities in an uptrend are wonderful buy opportunities. Look at this. Since we got bullish in the trend on the 18MA, every time that we got oversold, I'm going to just mark with a vertical line, and you're going to see that they presented, for the most part, incredible. Well, that one actually didn't translate into an entry. This one did. This one did. And this one did. So look at those. You could have made money very easily. Only one of those was a losing trade, which was right here. The rest of them made a lot of money, especially if you trailed below the low of the true low of each day. You would have definitely made quite a bit of money in this bull run up, and that's why these trend trades, they have high probability. But keep in mind, every time this happens, it becomes more probable that we're going to have an actual trend reversal. So we've had how many of these bumps into the 18 moving average? We've had one, two. One more would be okay, I think. We get three of them, but after that, the probabilities of an actual reversal, I'd say, increase quite a bit. So that's what I'm looking for on gold. If you got something out of this video, make sure you like, subscribe, and share it. If you like the way I analyze this market using the price action or the commitment to traders stuff, I do a lot of this over in my Discord where I share my trade setups for people to learn from. I also share a weekly setup markets written document going over my analysis so you can learn how to analyze the underlying fundamentals in these markets. If that sounds like something you'd be into, you can send me an email to tradiustrades@gmail.com. I'd be happy to get you into the Discord. Really great crew of people in there. I'm also thinking of starting monthly chats around trading psychology and different things, opportunities for everybody to connect and chat about different subjects relating to the art of trading. And hope to hear from you, and I hope you found this valuable, and enjoy your weekend, everybody. Thank you.